Welcome to the lecture on income tax and ITR filing system. In today's lecture, we will discuss and explore the basic fundamentals of taxation system in India. And by the end of the session, you will understand why paying tax matters, who needs to pay tax, and what are the benefits of paying taxes, and overall the basic tax regime and system in India. So let's begin. So let's start with the basics of income tax. What is income tax? When we talk about income tax is a direct tax which is imposed by the government of India on the specific income of entity and individuals. Unlike indirect tax like GST is an indirect tax which you pay while buying or purchasing the goods, while income tax is paid directly to the government based on your earnings. When we talk about taxable income or the taxable amount, there is a very simple formula, that is whatever your taxable income is, that is multiplied by the applicable taxable rate, that will give you the taxable amount. All these provisions of the tax are governed by a specific law, which is the Income Tax Act 1961. Coming to the next, why ITR filing is important. Now many people ask that why they should file income tax return on the money which they have earned so hard. So let me tell you what are the compelling reasons that why one should file an ITR. The first thing is that it is a legal obligation. Filing ITR is a legal obligation. It is a legal duty. Every year, the government of India notified a specific exemption limit on your income. So if your income exceeds that basic limit, then you have to file the ITR and show your income to the government. So what ITR filing does is that first, it is a legal obligation, and second, by filing the ITR, you will avoid the penalties that are levied by the government. The second reason is that you can claim the refunds. Suppose if you are working in a corporate sector, your TDS will be deducted by the employer. So in case if your TDS is deducted in exceed or in excess, then what you will do? Then in that case, by filing the ITR, you can claim those excess TDS return what your employer made your TDS deducted in excess. You can get that TDS, your money back by filing the ITR. The third reason is that ITR serves you as a income proof. Banks requires ITR for any of the loan they are giving. So they will ask you for the ITR in case if you are applying for car loan, home loan, credit card, or any kind of other loans. Similarly, many embassies also ask for ITR return in case if you are applying for the visa for traveling purpose in foreign countries or so on. Fourth reason is that if you are having a business or you are dealing in stock trading, in that case, if you are having a loss, if you made a loss, then those losses can be carried forward into the next year only and only if you file an ITR. So if you are carrying a business or you are dealing in stock market or stock trading and you made a loss there, then you can carry forward those losses into the next year by filing the ITR only. So finally, what ITR is creating is a financial record for you, for your usefulness, for your further documentation process. And it will also help you in your further financial planning. So filing ITR is not just about legally complying to the law, it is also securing your interest financially. Now, coming next, who should file an ITR? It is very important to know that who should file an ITR. First is any individual whose income exceeds the basic exemption limit, he needs to file an ITR. For older regime, there is 2.5 lakh of exemption limit, and for assessment year 2026 to 2027, there is 4 lakh exemptions to an individual. So, an individual has to file an ITR whose income exceeds the basic exemption, whatever the applicable exemption is there. Second is all the business owners and the professional also needs to file an ITR, whether they are making profit or not, irrespective of the profits. They need to file an ITR, and that is mandatory for them also. Third is the directors of the company. If you are a director in a company, then you also need to file an ITR irrespective of your income level. And fourth, for those ITR is compulsory, are those who are having any foreign assets or they are having a signing authority in any of the foreign bank accounts. They also need to file an ITR, and that is compulsory too. Fifth is for anyone who wants to claim the tax refund, irrespective of whatever their income tax is, even if their income is below the exemption limit. And lastly, you can also file an ITR voluntarily also without these conditions, just for maintaining your records. Many people do so just for maintaining their financial records. The key takeaway is that whenever there is a doubt, it is better to file. Next is understanding the Indian tax structure. See, income tax is always collected by central government. Now, two terms are very important to know for you. The first is financial year and the second is assessment year. See, the financial year is the year in which you earn your income. Income Tax Act 1961 specifically has provided about the financial year, that is from 1st April to 31st March. That will be your financial year. And the second term is the assessment year. What is assessment year? Assessment year is the year in which you file your return. Your income is assessed. That is called assessment year. For example, you have earned your income from April 2025 to 2026. That will be your financial year, that is 2025 to 2026. And after that, when you will file your return in 2026, then for that the assessment year will be 2026 to 2027. Now coming to the heads, under what categories your income is categorized. So basically there are 5 heads under which your income is categorized. First is for salaried person. Second is the income earned from the house property. Third is the business or professions. Fourth is any income earned from capital gains. Any income earned from other sources like interest or dividends. So these all are the 5 different heads under which your income is categorized. Currently, India is providing 2 tax regime. The first is older regime and the second is newer regime. Anyone can opt between these 2 regime to file their ITR. The first one is the older regime, in which the 80C and 80D etc. deduction are there. And with newer regime, there is a lower tax rate but fewer deductions. Taxpayers can choose between these 2 regimes which suits them better. So understanding this tax structure is very important and crucial for you, as you need to file the correct ITR form, and the tax calculation, it only depends on the income sources. So now coming to the ITR forms. See, what the income tax department has done is that they had created the various kinds of form for different categories of person, under which they will file that specific ITR form. ITR 1, which is also called as Sahaj form. It is one of the simplest form for the salaried employed whose income is from salary, whose income is from pensions, whose income is from house property and other sources. Most of the employees choose ITR 1 to file. ITR 2 is for those individuals with capital gains. Suppose if you are selling a property and after selling that property you receive some profit from that, then those profit will be shown as a capital gain, or in case if you are selling a stock, the same will be applicable, and for that ITR 2 will be applicable. Or in case if you are selling multiple house properties and you are receiving profit out of that, then you also need to file same ITR 2 for that purpose also. ITR 3 is for businesses and for professionals like doctors, lawyers, consultant or a shop owner. ITR 4 is also called as Sugam, and these are for the professionals and the businesses who choose presumptive taxation scheme. For presumptive income, those business or professionals who wants to show their income on presumptive basis, they need to file an ITR 4. ITR 5 is for partnership firm, LLP and associations. And ITR 6 is exclusively for the companies. ITR 7 is for political parties, trust and charitable institution as well. So overall, choosing the right form is very critical while filing the ITR, because in case if wrong ITR is filed or a wrong form has been chosen, then in that case your form will be rejected and you will lead into trouble and more difficulties. So let's quickly recap what we have learned today. First, income tax is a direct tax which is levied by the government, that is Central Government of India. Second, filing ITR is not just only a legal compliance, but it serves other purpose as well, like claiming refunds, getting loans, and for other financial records as well as documentation. Third is that knowing whether you are applicable to file the ITR based on your income, assets, or profession. Fourth, understanding the basic taxation structure. What are the differences between the assessment year and financial year? And what are the specific 5 heads under which your income is classified? And lastly, fifth is choosing the correct form for filing the ITR, because choosing the wrong form can lead you to the unnecessary complications. That's all for today, and thank you everyone for your attention, and I hope that this introduction will give you the clarity about the tax system and filing ITR. In our next lecture, we will be more practical and we will provide you an hand-on experience. If you have any question or any doubt, we will answer them and respond your query in Q&A session. Thank you everyone.